Financial markets have price movements that repeat over and over again. These movements can called waves. Elliott waves theory is a comparison and complex topics, often partition months and even years to master. Despite its complexity, there are some elements of the Elliott waves that can be incorporated and may help to improve your trade timid. So I will try to keep this very simple, and I will break down to the wave theory into the small pieces. First concept: impulsive and corrective waves. Rapid Nelson Ellison take trade who dropped the Elliott wave theory produced that trends in financial prices resulted from the investors' permutation physical logic. He found that the swing in mass physiology always showed up the same recurrence fractal patterns of the waves. Elliot discovered that the stock's index prices patterns were structured in the same way. He began to look at how these repeated patterns could be used as the predictable indicators of the future market movements. Now, price movements in impulsive correct waves, knowing which waves is likely to underway and what recent waves will help you to the forecasts what the price is likely to do next. And impulsive waves is the large price move and associated trends, and uptrend keeps reaching higher prices because the moves are larger than the moves down, which occurs between those large waves. Correcting waves are the smaller waves that occur within a trend. So knowing this is the advised to trade in the direction to impulsive waves because the price is making the largest movement in this direction. Impulse waves provides a better change of the making a large profit that corrective waves do. You can use corrective waves to enter into the trend trade in the attempt to capture next bigger impulse waves. The ideal way to the trade is to buy during the pullback or corrective waves during uptrends and ride the next impulsive waves as it takes the price higher. Also, you sell during the corrective waves and downtime to the profit from the next impulsive waves down. The idea of impulses and the corrective waves is to use the determinant when the trend is the changing direction. If the price change chart shows big moves out of the upside with the small corrective waves is between and then as much larger down more occurs, that is a signal uptrends may be over. Since impulses occur the trending directions, a big move to the downside which is bigger. That prior corrective waves and as a larger to the upward impulses waves indicator the trend is now down. If the trend is down and the big up wave occurs, that is the big as the prior down wave is during the downtrend. Then the trend is now up and you should look to buy during the next corrective waves. Second concept, trend and pullback price structure. Elliot found that when the uptrend is underway, it typically has three large upwards price moves with two corrective. This create the five-way pattern: impulsive, corrective, and another impulsive. These five waves are labeled wave 1 through 5. Restrictively, the uptrend is followed by the three waves lower and impulsive down correction to the upside and another impulsive down. Their waves are labeled A, B, and C. Elliot also found that these movements are fractals, meaning the pattern occurs on small and large time frames. For example, the first impulsive waves high within the uptrend on the daily chart composed of the five waves of the Hourly chart. Also, corrective waves are composed of the smaller waves if viewed are smaller chart time frame. Just to impulsive and corrective waves help determine when the enter trades and in which directions the trend is moving. The price structure can do the same. Assume this was at a big move to the upside and impulsive waves, then the corrections is likely to follow. That corrections is the downside will often unfold the three waves, a drop and a small rally, and then another drop. You can use this to improve the trades timid by the waiting to the second drop, getting the right when the price starts to the drop first time too early as another drop is likely common. Also, once there have been three big moves to the upside, the uptrend may be nearing competitors and impulsive waves to the downside, you will be confirmed that the price is likely to hit a lower and the uptrend is indeed over. Third concept is corrections size. So your trading plan should be to buy on corrections during the uptrends or selling on the corrections in the downtrends, and it is helpful to know how large the typical correction is. Based on the 5 waves pattern, waves are in the first impulsive waves of the trend, and waves 2 is on the first corrections. Waves 3 is on the impulsion following by the correction waves 4 and impulsion waves 5. Based on the research of the Nelson's, waves 2 of the typical is 60% of the length of the wave 1. If wave and advance $1, then wave 2 will likely to reduce the price drop around the 60 cents. Wave 2 is followed by the impulsion waves 3. The third wave is trended often to the largest, usually much bigger than the wave 1. Wave 4 comes next to the typically 30 or 40% the same size of the wave 3. For example, if the wave 3 relied $2, the price is likely to drop to 60 or 80 cents during the wave 4. The same concept holds to the true to the downtrends. These are the average since over May trends and trends. Corrections may be smaller or larger than the average and any size trade. Yet, even having the approximate idea of how big the corrections is likely to be can help. Improvements your trades theme significantly. The 3 golden rules of the Elliott waves theory. There are 3 important rules in labeling waves. Rule number 1: wave 3 can never be shorted impulsive waves, so wave 3 should be the longest and the impulsive waves, but they cannot be the shorted, which means that games 1 or 5 cannot be longer than the wave 3. Also, the higher of the wave 3 must be higher than the of the wave 1, and if it's not higher, you can have start your recount. You need to remember that the impulsive waves are meant to be marking programs, no showing down. Therefore, if the price does not exact the high wave 2, then that means there's no progress. Therefore, you have to start the recount. Rule number 2: wave 2 can never go beyond the start of the wave 1. If, in other words, wave 2 should not retouch more than 100% of the wave 1. If the break occurs below this low, you need to start your recount. Rule number 3: wave 4 can never cross the same price area as wave 1, meaning that wave 4 can never overrule wave 1. So, a low of the wave 4 cannot be below the high of the wave 1. If that happens, you need to recount 3 Elliott wave guidelines. Now we got 3 golden rules, but also have the 3 Elliott waves guidelines. First guidelines: when the wave 3 is on the longest impulse wave, wave 5 will be almost approximately equal to wave 1. Second guidelines: the structure of the wave 2 and wave 4 will alternative. If wave 2 is the sharp corrections, wave 4 will be the flat corrections. If wave 2 is the flat, the wave 4 will be the sharp. And the last guidelines after the F5 wave impulsive advantage, ABC corrections usually and in the area of the prior wave 4 low. Elliott wave trading is not that easy to understand it at first. As a matter of the fact, the easiest part of the theory part, the hardest part is the approximate part. That's why I advise you at first to utilize the concept of the taking and the beginning of the video, impulsing and the corrective waves, trend to the pullback price structure and correction size. The most important thing to remember is to only take trades in the direction of the impulsive waves and the trades during the correction waves. Look for the trade entry signals once the price has corrected. The average amongst the corrections is not likely to stop exactly the percentage levels discussed before. So taking trades slightly above the or below the described percentage level of the 5. Also consider keeping the track of the each wave in the overall price structure. For example, after the 5 waves pattern to the upside, bigger 3 waves declines usually follows. Watching the direction of the impulsive waves will signal potential trends to the change, and that signal is stronger if combined by the 5 waves impulsion pattern or 3 waves correction pattern ending. This Elliott waves concept will improve the analysis skills and improve your trading theme, but it is not without its own problems. As I said before, the theory can be complex to apply, as it's always easy is for the 5 waves and 3 waves pattern. Elliott waves is not the trading techniques. There are not specific rules for entry or exit or the 1 right way to use it in trading. As a result, the one Elliott waves has been avoided by the many traders, not due to the lack of the understanding, but because of the approximately subject nature of the how may be applied. Nonetheless, there are many traders who have successfully used Elliott waves patterns in their trading. This video was basically under the introduction to Elliott waves, and I tried to not do the complicated things, but in future videos we will deeper and we will talk about some advantage Elliott waves concept that can be approved to the day trading and swing trading. As always, if you learn something new about the 4 wave, leave us like to show your support, subscribe to our channel and click the bell icon to stay notified when we upload new videos. Until next time.